First of all, thank you very much for the invite to speak here. I presented to the conference back in Napier a few years ago and thoroughly enjoyed it. It was one of the most enjoyable conferences I've been to, so I really appreciated getting the call back here this year. Anyone that's seen me present before knows I normally take about 2 minutes. No, I've got it sorted. Excellent, good. Just want to get that out of the way. Excellent. Another good year, spend it wisely. That is the title of my address today. But it was also the title of Rabobank's New Zealand Agribusiness Outlook for 2018 that we published back in January. And there were two clear themes we highlighted in the report. First was just how well the ag sector was doing, with favourable market conditions underpinning a second year of broad-based profitability across almost all subsectors. But secondly was the high degree of change that appeared to be racing towards New Zealand farmers, both domestically and internationally, and the uncertainty this was creating. And that's why I think the organisers of this year's conference have really nailed it with the theme, because now is exactly the right time to be asking ourselves how to stay ahead of the curve. New Zealand agriculture is very much deciding where it wants to be at the moment. There's an ongoing discussion about the right position in the industry on the spectrum between low-cost, nimble producer and niche, high-value, sustainability-led exporter. While I'm not going to discuss the road we must take, I do want to set the context in terms of the environment we must navigate, whichever road we do take. As with most analysts, I'm probably going to leave you with more questions than answers, but I've seen what a fantastic lineup of speakers we've got after me, so I'm pretty sure between them and you guys we'll be able to figure it out and answer. And it's important that we do get the answers right, because periods of sustained productivity in agriculture are hard earned, and the decisions made during those times often determine how this sector performs in the cycles that follow. First of all, let's just take a moment to reflect how well many of our sectors are doing. Primary industry exports revenue is forecast to increase by 10.8% to $42.2 billion in the year ending June 2018, the largest annual increase since 2014. The $4.3 billion earned in December 2017 was the largest ever earned in 1 month, surpassing the previous high in May 2017 by over 10%. This is predominantly been driven by the recovery in the dairy industry over the last 12 to 18 months, high horticultural returns, increasing red meat prices, and high log prices, driving record forestry harvest volumes. And as we've just heard from Dan, one of the real star performers has been the dairy industry, with the average export revenue of venison last season up 9% over 2015-17, and schedule prices currently sitting $2 to $2.50 ahead of previous highs for this time of the year, as high demand continues from those key markets in Europe and America. And overall, 2018 looks to be a profitable year for most New Zealand producers across a broad spectrum of subsectors. But more importantly, for most, it's the second consecutive good year, or at least the second consecutive good year, generating a sense of sustained recovery in New Zealand agriculture after a run of tougher years. This is important for long-term confidence and attracting investment into the sector. How has this been achieved? Yes, global market settings are firmly in favour of New Zealand farmers, with the world enjoying a recovery that is driving up prices for key commodities that New Zealand produces. And yes, restricted supply of a number of New Zealand's key commodities has undoubtedly had a significant impact. But I think it would be too easy to put it down to global supply and demand dynamics, and to do so would do a disservice to other factors that have had an impact. The downstream processing and marketing industry look more settled than it has for years. Recent ownership changes in the red meat processing sector have been bedded down, debt levels have reduced, and profitability has largely returned. There appears to be far greater certainty of industry structure and strategy, and an increased focus on product, brand, and market development. Equally, if not more importantly, has been the role that expanding and improving market access has played. It has enabled us to meet more consumers, to diversify and explore opportunities in other markets, and in many cases provide a competitive advantage against our competitors. Okay, it's cut a wee bit out, but I can explain it. One free trade deal in particular has had a fundamental impact on influencing the direction of our industry. In the year prior to signing the free trade agreement with China, 5% of New Zealand's agricultural exports went to China. It was our sixth largest market. Last year, that number had jumped to 21%, and China was our largest export market by more than double our next largest, Australia. In the space of just 1 decade, New Zealand has fundamentally shifted its export focus from the EU-UK market, where the bulk of New Zealand ag exports had been concentrated for generations, towards China. In 2000, nearly a third of our exports went into the EU-UK market. Last year, just 13% of it went there. This will quite rightly make people in the room a bit nervous. Too much concentration in any one market leaves you exposed to concentration risk. On top of that, in a relatively very short period of time, we have shifted away from a market that New Zealand has known for a very long time. It understands well and has consumers that largely behave like us and know our products well, to a country that has different rules and ways of operating, quality of infrastructure, as well as consumers that have quite different eating patterns and limited knowledge of New Zealand. However, the benefits that this free trade agreement has provided New Zealand ag, and ultimately New Zealand society, have been undeniable. As a small example, last week I gave an interview stating one of the reasons prime beef prices are holding up relatively well is because of the strong demand in China, and that last year 1% of our beef exports went into the Chinese market. We shipped 0.8% of beef there in 2009, and that wasn't going to hold anything up. And likewise, the future potential in the region is enormous. I came across this slide at an event in Southland last month, and it just highlighted to me what an opportunity we have, relatively speaking, right on our back doorstep. No, not all of these consumers will afford to buy our food, but a heck of a lot will, and over time, hopefully these can increase, as to hopefully will our access into these markets as CPT, PP, and other free trade agreements take effect. Now, I know China is a very small market for dairy exports, and that there are some cultural challenges, amongst others, that have made it a tough market to crack. But nonetheless, there is an opportunity to build a strong market outside Europe and the US there. While there are multiple challenges facing the industry right now, not least biosecurity, for the purpose of this address, I want to focus on two. One domestic, maintaining our social licence, and one international, the changing consumer. And although these are two distinct issues, I believe the risks and opportunities that both challenges present are inextricably linked. Social licence is a term that has become very common within New Zealand agriculture over the last couple of years. It is often used as a general catch-all phrase to justify why certain environmental or animal welfare/health actions must be taken, or in some cases stopped. And while it is a term I've used myself a lot, I really have had limited understanding of what it truly meant. So I did some digging, and it turns out the whole social licence concept is a relatively new concept. It emerged from the mining industry in the 1990s, when there was a fundamental shift in how society perceived the impacts of mining due to the widespread publication of the industry's failure to resolve community conflicts. These conflicts resulted in a number of projects failing. For example, in 1994, Royal Dutch Shell lost $250 million in Peru after their project did not proceed because of significant community opposition. The phrase social licence to operate was first mentioned by an executive of mining company Placer Dome at the 1997 World Bank meeting, describing an essential requirement for the future survival of the mining industry. It hit the mining industry first because they were the first to start having a visible impact in a world of finite resources, and in order to maintain the support of the communities in which they operated, needed to demonstrate a greater level of transparency and responsibility before them, as well as encourage more open dialogue on the trade-off between development and the environment. In more recent times, the focus has shifted to agriculture, not just in New Zealand, but globally. Now, there isn't one accepted definition of social licence, but it is a measure of confidence and trust society has in a business to behave in a legitimate, transparent, and accountable in a socially acceptable way. There are no set parameters or attributes that social licence encompass. They will depend on the situation, the type of activity, the stakeholders involved, and the attributes and the particular emphasis on those attributes will change over time. For a long time, the economic benefit that New Zealand agriculture provided New Zealand society went a long way to maintaining our social licence, which is hardly surprising given that in 1955, 96% of New Zealand's income came from products grown on our own pastures. However, over time, other industries have developed, and while agriculture is still our biggest earner, less of our population are now physically connected to the farms and the provinces to truly realise the role that play ags in the New Zealand economy. In addition, as discussed, society is increasingly focusing its attention on the impacts that farmers are having on the environment and animals. Expectations as to how farms should operate are being progressively defined by media, environmental groups and social networks. In recent times, this has manifested itself through community calls for greater policy intervention in the area of water quality. And as New Zealand moves towards a low-carbon economy, there are increasing calls for agriculture to take greater responsibility for its emissions. The loss of Indigenous biodiversity is another issue on the horizon. And while New Zealand's animal welfare standards are generally very high, the high-profile issue involving mistreatment of bobby calves a couple of seasons ago shows we still have vulnerabilities in that area. Social licence is not binary. It's not a case of having it or not having it. It has different levels. And as the academics like to do, they've come up with a model to show that. And while I'm not going to bore you with the details of that model, I just want to highlight that it basically moves from having a very strong high level of social licence, where communities have a high degree of trust and identification with the industry, and not only willing to let them define their own course, but will actually champion their cause, right down to the point where the industry or action is rejected by the community, and ultimately the ability to operate withheld. As you move from the top to the bottom, there are consequences. Industry rules and regulations are increasingly replaced by regulatory rules and requirements. And again, water quality is a clear example of that here in New Zealand. Public pressure has led to greater intervention by regulators, mandating how farmers will operate in order to ensure New Zealand has swimmable waterways. And this has a tangible impact on costs. $135 million annually for the rural community, to be precise, according to a recent report released by the Ministry for Environment, the bulk of which is to be borne by the sheep and beef sector, although I suspect on a per farm basis those numbers would be rather significant for the deer farmers in the room. And to clarify, the focus of this report is solely on E. coli, not other measures of water quality such as nitrogen or phosphorus. So the true cost to the sector will go well beyond this number. While some regulation of agriculture is inevitable, it is important that the farmers have the power to sufficiently influence the shape of any final regulations impacting their future. This power to influence flows directly from agriculture's social licence to operate. And with a recent report from the Productivity Commission on how New Zealand can move to a low carbon economy, recommending, amongst other actions, an emissions price on agricultural emissions, and that land use will need to change substantially. In particular, land planted in forests will need to increase by between 1.3 million and 2.8 million hectares, mostly converted from marginal profitable sheep and beef farms. I'd suggest farmer influence over policy is required now as much as it has ever been in the past. But social licence to operate isn't just about influencing policy. What's more important is getting the appropriate recognition for what farmers and the sector contribute to society. From a more practical perspective, it's essential for human capital, attraction and retention. It is vital that our best and brightest want to join the industry, not just within the farm gate, but as marketers, scientists, technicians, developers, IT specialists, the list goes on. This is very difficult to achieve in industries that have a poor social licence to operate. For example, I'd suggest very few parents and teachers encourage their kids to explore opportunities in the tobacco industry. There is no magic formula how to maintain or improve social licence, and while adhering to higher environmental and ethical standards will go part way to closing the gap between what's expected of farmers by the public and the reality of current farming practices, ultimately going forward, it's about fostering a positive relationship with the community through dialogue and mutual respect. In some cases, this will likely require further behaviour change. But where expectations are unrealistic or misinformed, New Zealand Ag must actively engage with the public to help them get a better understanding of how and why New Zealand farms operate as they do. So yes, we must continue to tell our stories, but it's also important to remember that to be truly effective dialogue also requires some listening, to ensure our messages are not getting lost in translation, and that the stories we are telling are appropriately tailored to adequately answer the questions that communities are asking. This leads on to the second challenge I wanted to touch on, the changing consumer. It is easy to forget that meeting the needs of the community to maintain social licence is not the same as meeting the needs of the consumer, particularly for an exporting country like New Zealand, where the vast majority of our consumers are not the local community. However, while they may not match like for like, there is an incredibly strong correlation between the needs of both our local community and our international consumer, and that is the sweet spot for New Zealand farmers. While global consumption of meat is expected to continue to grow in line with increasing population and rising incomes, meat consumption amongst affluent consumers, to whom we predominantly export, is increasingly be challenged by health, environmental, and animal welfare reasons. The recent growth in alternative proteins is a symptom of these changing attitudes and behaviour. The true threat we face is not from the alternative proteins themselves, but the underlying factors that are driving consumers towards them. To eat meat or not to eat meat is the question our target consumers are increasingly confronted with. However, except for minorities of strict vegetarians and extreme carnivores, the majority of consumers opt for a middle ground and exist as omnivores, including a balance of plant and meat in their diet. Interestingly, studies show there are 4 reasons why consumers continue to eat meat in the face of pressure not to do so, and they're called the 4 N's. Because they view meat consumption as natural, normal, necessary for health and strength, and because it tastes nice. And it's these 4 N's that ensures there will always be a strong base of meat-eating consumers. However, they are not immune nor tone-deaf to the public pressure. So while they may continue to eat meat, those that wish to address health and sustainability challenges associated with meat consumption will look to adapt their consumption behaviour. They will increasingly look to influence production systems by selecting products that have been produced by sustainable and ethical systems, while providing the maximum health benefit possible. Alternatively, or in conjunction with, they will employ a less but better strategy, whereby they actively eat less meat, but consume higher quality meat when they do. On both counts, New Zealand has a prime opportunity to take advantage of this, and to leverage the environmental, health and animal welfare benefits, not just of our pasture-raised systems, but by the comparative high standards by which we hold ourselves to account in relation to these attributes. And this is where we can find the synergies between meeting the needs of the local community and the needs of our consumers. No, attributes and the emphasis those attributes have will not always match up neatly. And an issue like water quality, which is a major issue for our local community, may pale in comparison to the concern some overseas consumers have about the conditions in which an animal has been raised. And not everything we do to address local concerns will directly flow through to extra value with the consumer. Some actions will simply incur extra costs that represent the cost of maintaining New Zealand's social licence or doing business in New Zealand. But there will be opportunities to find the win-win situations, where what is considered business as usual for New Zealand farmers is seen by consumers as a fundamentally different and better way of producing food. The challenge will be communicating to our consumers the positive sustainability and ethical aspects of our farming system, because it relates to attributes that the consumer cannot assess, cannot confirm the existence of with any degree of certainty, even upon consumption. Consumers need to trust others in regard to such attributes that they have been fulfilled. Credibility of product offerings associated with such attributes place demands on the farming systems and necessitates the development and implementation of systems to ensure the integrity of the supply chain and to justify any claims made. So capitalising on these opportunities will be no easy task, and to achieve it, we'll need to ensure we get our house in order, ensuring the appropriate investments are made in the technology and systems that will provide this assurance. all the time ensuring we're producing a high quality product in terms of eating experience, which is essential to underpin any premium food product. While I've talked a lot about the needs of the community and the consumer, I've not touched on the needs of the most significant person in the food supply chain, the farmer. They need to have the ability to operate in an environment that provides the opportunity to make a fair and healthy margin, free from overbearing and unnecessary regulation that imposes needless costs and adds layers of complexity to their farming business. They need clear signals and reliable information in relation to any disruptions on the horizon so they can make informed decisions about future investments. They also need to receive appropriate recognition for the important role that they play both in the food chain and the positive contribution they make to New Zealand society. For New Zealand agriculture to be sustainable and successful in the long term, to ultimately build on the current success and take New Zealand ag to the next level, all groups' needs must be met: the community, the consumer and the farmer. However, too often when addressing issues or challenges relating to each of these groups, we tend to tackle them in isolation from each other, in silos, dealing with the needs of one group without considering the implications for another group. We need to start to think more holistically and integrated when looking at these respective needs, linking the needs of the three groups together and identifying and exploiting the win-win-win situations. Obviously, there will always be natural tensions that mean the needs of all group parties cannot be met every time. But I do believe if we approach things differently, it will create the opportunity to realise far more successful outcomes than we are currently. In the years after World War II, overseas economies grew and markets opened up for New Zealand's agricultural products. This led to rises in commodity prices and ultimately the boom of the 1950s and 60s. Farmers invested that increased capital in increasing technological innovation and scientific agricultural research, leading to groundbreaking advancements in how fertiliser was applied, animal genetics and pasture development, amongst others. It was those investments that enabled the industry to continue to thrive in the 70s, but equally importantly, they enabled the industry to survive through the 80s. While I don't know how long this cycle will last, I do know where the industry chooses to direct its improved cash flow amongst the sustained period will define the course of New Zealand agriculture for years to come. Thank you again for the opportunity to speak here. I really look forward to catching up with many of you over the next couple of days.